We're back now with our weekly grain market report, which is coming from, as always, our grain market economist here at K-State, Dan O'Brien. So Dan, thanks for joining us.
Thank you, Samantha.
Absolutely. So we're going to start a little bit different today. We wanted to hit on this first and foremost. And it's a little bit of news coming out of the Foreign Ag Service. Their weekly reports that we're used to getting from them on exports kind of gives us an overview of what we've seen in the U.S. They're going to be delayed for the next 3 weeks. That's a long period of time.
Yes, it is a serious time, and there was a report that came out shortly after the numbers they turned out last week that they had a data glitch. They, being the Foreign Ag Service, had a data glitch in their weekly export reporting numbers, and that they wouldn't have these numbers available to the public, which would tell who bought grain, what quantity, where it's going, etc. They wouldn't have that available till September 15th. So that it may or may not be a big issue, but still, so when we get out into mid-September, we'll have on September the 12th the USDA crop production reports, which we're hoping, which in my thinking is probably the biggest crop report of the year. The USDA will finally get out into fields, will establish a baseline, will either prove or disprove the accuracy of that Midwest crop report last year, which with numbers, yields, production that came in way lower, markedly lower, 13.7 billion as opposed to 14.3 that the USDA had said. So, well, that could go either way, and I've seen estimates that we can talk about later with regard to corn and all that for how supply and demand works. So, either way, that'll be a surprise to the market, and then that comes out on the 12th. Then on the 15th, we'll find out what's been happening in grain market exports since the last week in August on the 15th of September. So what I guess the uncertainty that I see in the market is that if buyers in foreign countries are really, really worried about what the U.S. numbers might be, and if they rush in whatever way they can to start buying grain, and we're not fully informed about it, you just have a potential for an awful lot of one shoe dropping and then the other shoe dropping on first the supply side with the crop report, and then the demand side with the exports. That could cause a lot more there's potential for a lot more volatility than normal, and a fair amount of grain price movement. So I'm concerned about it, and I'm sure I'm not the only one as we look at these markets.
Absolutely. Yeah. Something that we'll keep in mind here and we'll keep an eye on as we continue on. It's crazy to think as we're recording this, the first day of September. Tomorrow, as this goes up, the second. It's insane to think about it already being September. It seems like, just yesterday we're like in a few weeks, a month or so.
Harvest is just around the corner for corn. I would say, since we're talking about that, we've caught some rains in parts of western Kansas, and grain sorghum that had been looking pretty rough, and did what grain sorghum does, is just hang around until maybe it gets moisture. And so in some places it has now late, not full profile replenishing, but enough to come up with a decent head. And now the race will be, if I understand what our agronomic brethren have talked about grain sorghum for a while, we'll if we do get late heads, will we mature by the time frost comes and be able to harvest a crop? So we'll see. I guess hope springs eternal, and we'll see if the grain sorghum comes through, and hopefully the dryland corn that's out there will come through better than some people are expecting as well.
Absolutely. Yeah. That precipitation that we've been getting periodically, that's just been helping us continue on the little bit that we've been able to. It was a welcome sight for a lot of people this past week. And we'll talk about that a bit in our weather report coming up as well with Chip Redmond. So stay tuned for that. But Dan, let's really get into the futures markets that we've seen this past week. What have they shown? Anything crazy?
Well, the corn market on yesterday, on Thursday, closed with Dees corn, which is now the lead contract for the sake of what elevators would use, 658, and that is down a little bit from 668, but up from about 560 where we were in essence at the beginning of July. So we've had a pretty good run on corn. Have come down just a little bit off those highs. And corn prices, with regard to that, you still see really strong spot basis levels for cash prices and for new crop bids across most of the state. Again, basis running from a high of $1.10 over in Garden City up to cash price of 768, a low basically in Salina of 69 cents over basis, 727, and then some other places that are also strong. Colby 90 over, Hutchinson 85 over, Columbus 75 over. So pretty strong prices. And grain sorghum going off of also that D's corn contract now 30 over to 40 over on the high side. And then Salina 10 over, 25 over, 16. A little bit of weakness in Topeka for whatever reason. At least it may be only temporary, but it is you have a little weaker basis bid. So you see that in the feed grains. If we're trying to assess the feed grain market, I think we still have a lot of people that are anxious to get hold of grains, and we don't see the bids from livestock feeders that on these cash bids from elevators. Livestock feeder bids at the time we were talking about $1 over or $1.10 over in some of these areas. As I was talking with producers, they're like $1.40 over. It's even stronger. So a lot of anxious people with livestock to feed, ethanol plants to run, trying to get hold of grain that any grain that they can. So so with that, I think it'll be really something to see. I have a longer term concern as we head off into next year for corn, and that's that this issue that we see happening in Europe in terms of natural gas prices and supplies being so constrained. That this is tied up with the Russian pipeline coming into European states and all the reticence of Russia to send this now, given this war situation. It's very possible that the extremely tight situation we have now in Germany, elsewhere, could get even tighter heading off into the winter months. We're not even into winter yet, and if that goes higher, then it's a double-edged sword for us. Of course, the energy markets would be strong. We'd see ethanol hold up pretty well, so that'd be on the good side for ag. But again, natural gas, primary feedstock for fertilizer. We'd be really worried about where fertilizer prices could go. I've read reports of the building up of stocks, et cetera. And if you and I are thinking about this, you can bet our crop producers are trying to think that much farther ahead and trying to secure supplies at a decent price. So I wouldn't be surprised that the European natural gas and energy market issue could have a big impact on what we're able to do in agriculture coming out of 22, heading off into 23.
Absolutely. I think that's a concern of everyone at this point after the rough year in terms of fertilizer prices that we had just this past spring, and anticipating something like that similar again. That's awful.
We look at $1,000 a ton as, gosh, it's only that. It was 14 to 15 to 6 or higher at the height of that last year, and it just ramps up cost of production quite a bit. That's the issue. So if that be the case, then our we'll need $6.5, $7 plus corn to pay for the higher costs, and if we get into that situation again. Absolutely.
And I know in terms of our wheat and soybean markets, there's been some interesting things going on in theirs. Tell us a little bit about that.
There's a back and forth kind of theater issue going on. That's probably not a good grain market term when you look at what's going on between Russia and Ukraine. So there have been some shipments of feed grains and now it's starting to be some wheat coming out of Ukraine. The prices that they're bringing out in the market are very competitive. Their currency is not doing great. Reports now that there's enough wheat out on the market from Ukraine that is starting to work against Russian grain exports. So the cynical economist in me thinks, well, so if by letting grain flow out of Ukraine and Russia is being hurt, I don't know that that's a sustainable long-term situation. So I'm really curious to see how that will work out. Right now, again, Ukraine sent out a headline here this week on Thursday saying that Ukraine says southern offensive by Russia, quote, not affecting the grain corridor. Well, wow. To try to ship grain and, oh yeah, we're fighting a war at the same time. What a deal. So, but when that grain, again, wheat and corn comes out from Ukraine, it competes very well against the United States for exports. So it's something to watch going forward. I might also mention on soybeans, we talked about the price movement in the last week, and we had run up from a low back in, again, early July, about July 10th, 13th or so, of about 1280, 1290, up to a high of about, well, literally 15, just under $15 within the last week or so. And now we're down to 1394, just volatility and hopping around. Some of that's come down is probably, again, a Midwest crop tour came in with a very healthy yield for soybeans. So that's mitigating some concerns, expectations of record high crops in South America. At least that's their intention. They have to actually plant those crops first, so they'd be harvested next year. So all that in play, and I would say, just kind of to finish up, we take those numbers out of that Midwest crop tour, and are they the right numbers or not here? The USDA said 175 bushels an acre for corn. The Midwest crop tour said, in essence, 168 and change, and that's a big swing. I've seen some other crop models that seem to be trustworthy. Greg Ibendahl in our shop came out and said, using a modeling approach that he had, came in with a number pretty close to what the USDA had said. I'm more inclined to think that the consensus of models that I've seen is more like 170 to 172 bushels per acre, and production of 14.1 or 13.9 billion bushels. And you're plenty tight in stocks to use just with that. You're at 1.2, 1.3. You're at 8.5 to 9.3% stocks to use. Corn prices, 690 to as high as $7.50 to $8. So chances are that we're probably seeing not as high as the USDA's number, in my view, and maybe not as low as Midwest crop tour. So being a thoroughgoing economist, I guess I'll go in the middle till I can figure out what's going on.
You'll pull a Goldilocks today.
I guess so. But there are a number of other modeling efforts coming out saying 170, 172, 170, 172.5. And for the soybean market, really the only thing that would really fall apart on that, given the world's thirst for oil seeds, is if Brazil had a tremendous crop, if it actually came to fruition, and a high U.S. dollar worked against us out into 2023 on exports, then that's probably our risk scenario in the first half of that year. But there's a long way to go before we get there.
Sure, still a bit more still to understand in terms of what we can expect to get stressed to that point. But Dan, anything else that you'd like to plug? I know Ag Manager's constantly putting out information. Of course, this report is one of those things that you're always putting out weekly. Anything else that listeners tuning in should probably be checking out on Ag Manager this week?
Well, yeah, we have our weekly reports that go on this, and what you and I are talking about, Samantha, is in print, and we've been following that up with a day or so later weekend reports too, so they get the whole get Friday included also. Wonderful. So those will be there, and I guess we're not. If I stand back and look at these markets, we're not just automatically dialing in a soft landing into harvest lows, et cetera. We, just as you and I have talked about, we have factor upon factor with, in essence, government sources. When we get solid numbers, we'll have to respond to in the corn market. So that's all in play. We didn't talk this time about the weather impact that this moisture's had. I'll be curious to hear what Chip has to say with regard to how this moisture might affect the hard red winter wheat areas. Have we replenished soil profile to any degree that we're more confident about seeding wheat. And we may or may not. I think we need about the 4-inch soaker rain to get to that level of confidence. But we don't have the dust blowing around quite as bad as it was at this point.
Sure. Well, like you said, that weather report is to come, and previewing a little bit of it, not so optimistic in terms of soil conditions, but you'll hear more on that later. But Dan, as always, thank you so much for your time.
Thanks, Samantha. Take care.
Absolutely, you as well. Once again, that was Dan O'Brien. He is our K-State grain market economist covering this week's grain market update. We'll be back with more ahead on Agriculture Today.